Hi, everyone, and welcome to the Amber Data Derivatives Podcast. I'm here with Bret Kenwell, who's the lead options analyst over at eToro. Bret, how are you?
Good. How are you? Thanks for having me.
Absolutely, absolutely. So, Bret, I was wondering maybe we could just jump with a little bit about you and your background, and then we could get maybe a broad overview of eToro for anyone who's sort of new to that exchange.
Yeah, for sure. I started working at eToro last summer. I'm the options analyst at eToro, and I really honestly just I got into the like journalism slash investing route sort of by mistake in a way. I really like to write, but I studied finance in college and out of school, I was kind of just writing on the side as for a little extra money, and it just kind of one thing led to another, and I kind of carved out a path in that direction, and I ended up writing at thestreet.com for 10 years, basically doing fundamental and technical analysis, and and in that time I started a newsletter, and who our head analyst was in the U.S. Her name is Kelly Cox, and she would read my newsletter, and one day she reached out to me and said, "Do you know anything about options?" And that's pretty much how it unfolded.
Oh, that's fantastic. You also wrote a lot for Seeking Alpha. Like Seeking Alpha was one of the OG forums I used to read growing up. How did that kind of come about, and what did you do there?
Yeah, honestly, that was the side gig money. Fresh out of school, it was in what was it, 2012. So it was not exactly a great jobs market. A lot of people with a lot more experience were still looking for jobs. Made it really tough for people fresh out of college to get a new job, and I was writing on the side, and it was something I really enjoyed doing. And it just, one thing led to another, and I kind of snowballed into the, more of the writing side of things than working, in investment banking or anything like that. So it just kind of worked its way out, and now I've come full circle into more of a traditional analyst role.
Oh, that's fantastic. And then you
Yeah.
mentioned, at the street, you were writing fundamental and technical analysis. Were you incorporating options into sort of those views as well? Like, oh, this is, I don't know, the cash per share book value, and I want to sell covered call, sorry, cash secured puts here type of deal? Or how were you thinking about the options component into it?
Yeah, the options component is can be tough to weave into sort of everyday language, just because it is a more it's I always options are so funny because I always kind of compare them to a car, right? Like everyone fundamentally knows, like you put the car in drive and you're going to go forward, and you put it in reverse, you're going to go backwards. But if you ask someone to like open up the hood and explain the components of the car, it's like a lot of people can't do that. And I'm not a
Mm-hmm.
mechanic, but my point is like they seem so simple. Like calls are bullish, puts are bearish. But when you start to really explore the different things you can do with options and the different mechanics behind them, it gets pretty complicated. And for that reason, it can be difficult to explain to people who aren't actively seeking out options. So that's been kind of a fun role to play with eToro, now that we offer options, and we can explore that with our clients and do webinars and kind of talk about it more. But just in terms of everyday writing, when I would write with like the street or Seeking Alpha, options would be kind of hard to weave in there in my experience.
Yeah, interesting. So, kind of jumping off to the eToro side. So, I think I might have referred to eToro as an exchange, but it's a broker, not an exchange. I'm just sort of used to traditional crypto exchanges. So, eToro started in 2007. Is that right? And you guys started with maybe you could just give us a brief overview. My understanding is you recently launched crypto, recently launched options, but maybe you can give us a brief overview.
Yeah, the company started with a focus more towards crypto and towards stocks, and now we've added options to it. And it's in the U.S. it's not quite as large of a company as it is internationally. Internationally,
Interesting.
eToro is fairly large, and overall with 35 million clients, or 35 million users, 100 different countries, stocks, options, crypto. So it has really started to branch out and into different areas. But the element that makes it really unique is the social element. So if you were to go into eToro's app or eToro's platform, in it, you would see a social, basically a social component embedded into a social feed where people can post ideas or, post whether they bought or sold and what they did. And of course, you don't have to post if you don't want to, but it's just a really interesting way for people to generate ideas, to follow other people and kind of see what they're doing. And yeah, just kind of come up with different conclusions and whatnot. So that's definitely a really fun component to eToro.
Yeah, no kidding. So we really saw this like similar type of concept with Wall Street Bets over on Reddit. So like eToro has its own sort of Wall Street Bets community, at, I guess I could say, within the platform, and people can talk to each other. Is there things like trade idea sharing or like cut leaderboards or anything like that? How does that kind of concept?
Yeah, eToro has what we call copy trader, and that's where you can where someone is out there with some of our popular investors, and there's different criterias that make copy traders. They have different risk scores and different components that can help people choose what who to follow and what type of investing style they want to emulate. And when they're using copy trader, you can see the results of the other investors and what their returns have been. So it is really really opens things up, and it's not so much like intended to be a hand holding thing. It's more so of like helping people take that next step, because a lot of times it's just not knowing maybe types of thematics they want to be involved in or the types of individual stocks, and by having a social element, whether it's someone that you follow really closely and you maybe copy a lot of their moves, or it's you're just kind of like hey, shares of ABC or XYZ have been up or down a lot. Let me look into it. And you go to the social feed, and people post research and all sorts of ideas in there. So it's just kind of a little of an inspiration avenue.
Yeah, I love that. I remember when I was a trader in Chicago, one of the like the main advantages of being on a prop desk is you have all these other traders that you can discuss your ideas with. So, everyone, it's like trading is really trading an idea, and so having a conversation around those ideas can really help you develop sort of, what you're trying to do and where the opportunity really lies. And so it's really great to kind of have a place like that with an eToro so everyone can chat with each other. One of the things that you guys have done is this really interesting survey on options adoption. So, especially, I mean, here's a stat that I read from your guys' surveys that since COVID-19, 62% of survey respondents increased their options activity, while 5% stopped altogether. COVID, in my mind, was a big turning point for people wanting to trade options on the retail side. What are you seeing out there in terms of customers, in terms of your surveys, and in terms of options adoption?
Yeah, the survey was the survey was really interesting to me because there was some answers in there that I didn't quite expect. Some of them I did expect, like for instance, preference for calls over puts are roughly double,
Mm.
and that's not too surprising. A lot of investors tend to be bullish and look at things on the long side. But some things did surprise me, like credit spreads were much more popular than I would have thought, and it's not a bad thing. It's just I guess I just didn't expect that out of the respondents, and it shows sort of a reading through the data. It kind of shows to me like a maturity around options, or at least a maturing sort of mindset. When you go back even just a couple of years ago and look at how the options market was, especially with in regards to the retail investor, we had the whole meme stock thing going on, and everyone was just chasing these calls, and I created a lot of hoopla, but it also burned a lot of people. Whoever got stuck in those, and some people got pretty wealthy from it, but other people, were left holding the bag. And when I look at sort of the respondents, the responses from the survey, and we look at our customer data as well, you're starting to see this sort of maturity around the post-pandemic, the post-COVID situation, and now especially the investors who didn't get scared away have a few years under their belt, have some experience trading the options, can get a little better sense of the risk that comes with them, and sort of the volatility that can come around, especially the shorter dated options. Was I was pleasantly reassured seeing that data.
Yeah, that's really interesting. And the point you just mentioned about collecting credit spreads as opposed to paying for debit spreads, that's for those who are sort of new to options, that's essentially being short vol versus long vol, even though it's on a capped basis on a limited risk basis. That is interesting that there's a little bit of a preference there for these types of short vol structures. I would have assumed that most of the newer options traders are buying premium instead of selling it. That's an interesting tidbit of information. So,
Yeah, and I
what?
think on the whole, the newer buyer or the newer traders are buyers versus sellers purely from just an understanding of how options work and conceptually, what drives them, and from an account size too. It's rare for like a newer trader to come in with a large account that can take advantage of the credit side versus the paying for a debit and the risk management that kind of comes with the two of those. But it was promising. I will say it was definitely promising.
Yeah, that's really interesting. Another interesting point about your survey, it said that people who traded options were more likely to trade crypto. Did I read that right? Was that so what did you make of that?
I kind of make two things of it. The first being that, but they kind of go hand in hand. The first being that options have just gained in popularity in general over the last, really the last 5 years, but it's been a longer term trend as well. And by the same, on the flip side, crypto has gotten more, people have gotten more comfortable with the idea of crypto, and particularly the more well-known names, Bitcoin really leading the way in that regard. But when you look at options and crypto, they kind of have the overlapping sort of sense of it can be a volatile ride, and for options, obviously, no one's going into Bitcoin expecting that they'll lose all of their entire investment like you could in options. But I think both types of investors have embraced the idea that there can be large swings in either. Like for Bitcoin, it's not rare to have a 50% move over a course of time, and in options, obviously, the volatility was pretty clear with options. But I think you have to be open-minded towards risk and open-minded towards volatility to dabble in either one, to embrace either one. It's just you have to have that in your DNA or your mental approach, because if you don't, they're just the wrong tools for you generally.
Yeah, that makes a lot of sense to me. One of the things that I find to be very true as well is that, you know, as you're like as a younger person, you have a higher risk tolerance. It's the time to take higher risk. But also, as you trade a smaller account size, not only do you need to take higher risks to sort of make more money, but it's also the time to do it, because if you do lose, you can recover from a smaller account. Once you're already sort of a very wealthy person with a lot of assets under management, that's no longer the time to take risks. That's the time to diminish risk and live off small risk-free returns essentially. So that makes a lot of sense to me that younger investors, which have higher risk tolerance, are those looking to trade options and looking to trade crypto, which are higher volatile assets. And the other thing that I think is very interesting about crypto, which is maybe not necessarily true for traditional finance, is that crypto is kind of an even playing field. There's no one who's been trading crypto for 80 years because the asset class is only about 12 years old. And not only that, but typically the retail people, the retail audience, the ones who have been on Reddit, who've been younger in generation, they're the ones with the information edge, not sort of the 80-year-olds, pension fund managers who've been around for a while. So that's a very interesting dynamic. What do you agree with that statement, or what do you make of that?
Yeah, I do agree with that. You see a lot more retail, especially given the narrative that was around crypto, and whether that's from the media's perspective or from more of a regulatory perspective, that really kept the institutions away. And I think there was always this um, sense of it won't last. Sort of like how we had around the meme situation, only that is a scenario that, doesn't have a longevity to it. It's more of a moment versus a changing of the guard, a change in tune. But when we look at crypto, it's a different story, right? It does have that long runway, it does have that longevity, and obviously there are coins that won't be around forever or won't be able to hold their value. But when you look at certain Bitcoin basically being the prime example of a store of value, retail was the first one there, and they were the ones that took advantage of it, and they are the ones that continue to ride the wave. And now when you start to add some legitimacy behind it, when you have the SEC approving ETFs and basically making it a more I don't want to say more level playing field, but kind of giving a green light, especially on the institution side. That just can drive in more flows, more funds, um, a heavier institutional flow. I mean, the institutions really can control markets to a large degree, and we see that especially in the options market and the equities market in general. But as more money comes in, especially for an asset that has fixed supply, it's just a supply demand dynamic, and as the scales start to pile up on the demand side, it's just a net positive in my view.
Yeah, definitely agree. So, speaking about the ETFs that we were just approved, the spot Bitcoin ETF, which was approved in January, and the spot ETH ETF, which was just approved last week at the time of this recording. What do you make of these approvals and the subsequent adoption that we've seen in the spot Bitcoin ETF so far?
I think the spot Bitcoin ETF adoption has been great. The fund flows have been very incredible, very strong, very positive. I think for the price of Bitcoin, and I don't think it's a surprise that it hit a new high off of those basically after that event. And I think it's a great thing, honestly. I mean, there's a lot of people that weren't necessarily bearish or negative on Bitcoin. They just they didn't understand it, or maybe they still don't, but they want to be involved, maybe from even a small portfolio perspective. Even if they're only allocating a couple of percent to Bitcoin, but maybe they didn't have necessarily the account types that allowed for them to own crypto. Maybe they didn't feel comfortable going to a more maybe they are more of a traditional brokerage type of investor, and they didn't feel comfortable going to a smaller broker or a newer broker to get that exposure. And now when you start to see an ETF, which is something that most investors are very familiar with and very comfortable with, and most probably have some type of exposure to an ETF or a mutual fund. So to see crypto kind of take that step into traditional finance, I think it's just a big net positive for investors who now have access to it, and for crypto enthusiasts who have had access to it and now have others who are able to buy it as well.
Yeah, I'm right there with you. One of the things that was kind of always interesting to me is when I think about traditional companies, it's like, founders start a company, then venture capital is the first ones to get in. Then after that, there's like investment banks who usually invest along with the venture capitals or underwrite an IPO deal. And finally, at like the tail end of the investment cycle, like retail gets to buy the publicly traded shares. But in crypto is actually quite the inverse, because, if you're a fiduciary, you can't really buy internet money and store it on your local, ledger wallet or USB drive, so to speak. So retail had the opportunity, due to sort of the risk appetite, to get in first. And now with every sort of iteration beyond that, we have the final cycle where the public shares or the ETF are now the first time that institutions get to buy. So like the reverse ownership order is very interesting. I feel like it's very true to the decentralized nature of crypto, where really the individuals were the first ones able and capable of buying crypto early on. When we talk
Yeah, I
about
love that analogy. That's great.
Thanks. When we talk about options trading, so we touched on meme stocks. Obviously, AI is like a very interesting options market. A, because of the volatility. B, because of the enthusiasm around like Nvidia, and then C, because Nvidia is $1,000 stock. You can't really swing around 100 shares of that easily, but you can buy a one lot option that represents 100 shares. In your opinion, or in your analysis, how much has the AI sector been a driver of options trading?
I think it's just one of the latest components to it, to be honest with you. I don't have, the data offhand in terms of percentage makeup of the volume that's been going to the semi names, but I can speak broadly on our platform's data, and in that we still see the traditional leaders in the options market in terms of volume, and that being the S&P options, the QQQ options, Tesla, that sort of thing. But now NVIDIA's firmly been in our top 10 and a lot of times in our top 5, which is pretty incredible when you consider how expensive. You mentioned shares are over $1,000 now, and subsequently the options become pretty expensive as a result. But to see how frequently NVIDIA continues to pop up, and of course AMD is always a popular name with investors, and some of the some of the levered ETFs in the semi space has made its way into our top traded, our top volume names. So I think in general, it's just an AI's the latest trend. It's not. I don't mean to make it sound like a short-term trend or something that's not meaningful, because it's very meaningful. But yeah, I think it does make up a big portion of it, and it does get investors excited, both institutional and on the retail side. It's just been a hot topic, whether it's involving options or with the stock.
Yeah, that's fantastic. So one of the other things that I'm personally excited about is getting options listed on the spot Bitcoin, spot Ether ETFs. What do you think about that? Do you think that would lead to more crypto volatility trading, or what do you think about sort of that prospect?
Um, yeah, it could lead to more volatility depending on the type of we'd have to see a lot of volume to get that volatility. But I think we could get the volume behind it, to be honest with you. I mean, options have become very, very popular, both from an investing perspective and a trading, especially as a trading vehicle over the last several years. And the introduction of zero-day S&P options have been, a big catalyst behind using short-dated or in many cases, zero-dated options. But I think Bitcoin will just be another layer of enthusiasm within the space. I mean, the thing I've always liked about options is the fact that, as if you're buying options, you know exactly what your risk is. If I go in and I spend $500, I know my risk is $500, and I can plan that around in my portfolio and say, this is my maximum risk. I'm not going to lose more than this. And that, I like that. That's comforting to me, as an investor. And, that is one perspective you don't get with, especially more kind of what can be a volatile asset in Bitcoin. You don't have that assurance it's only going to move. You could say my stop loss is 5% or 10%, but it wouldn't, you could wake up overnight or with 2 or 3 days and you could see it move far in excess of that. So I love the idea that someone could say, I'm bullish on Bitcoin, but I don't necessarily want to own the underlying, or I don't even want to own the ETF, because it can be kind of, gappy, as they would say on the, for trading around the market hours. But I love the idea that people could participate with options and have a limited risk and a way to participate without necessarily feeling uncomfortable. So, and just, I mean, Bitcoin's is a great trading vehicle. So I'd love to see the options come on it and kind of let the traders and the investors eat.
Yeah, I'm right there with you. And I think there's, since Bitcoin's a high volatility asset, like covered call strategies, earn a pretty big premium in terms of, passive yield, assuming, you still have downside risk, but that's kind of an interesting strategy I think people sometimes overlook. Cash secured puts in a similar fashion, where you can get paid to essentially put in a limit order, is how I like to think about it. It's not quite that, but it's a good content template. I think those types of strategies are going to be really interesting. I know that Grayscale has already filed an application for a covered call Bitcoin ETF that basically just does that type of structure. So I definitely would imagine that traditional investors that are pension funds in this case typically do these covered call strategies. It'll be interesting to see them essentially deploy capital to that type of volatility trading. So, Bret, on the eToro side, how do you guys view sort of crypto as like a percentage of your overall business? Because obviously you guys offer equities, currencies, a lot of different vehicles. How big is crypto in that sort of template?
Crypto is a pretty meaningful portion of our clients' portfolio makeup. We have a lot of clients that have certainly been around since before we started offering options. It's a relatively newer product for us, but crypto is certainly makes up a pretty healthy percentage of portfolios. I don't know the figure offhand. If listeners are thinking I'm dancing around it, I don't know it offhand, but it's pretty significant. Our clients tend to be long-term investors. They're here for the ride, especially as it pertains to crypto. And that there's pros and cons behind it because the cycles that we've seen in crypto can be, lavishly good and depressingly bad. So obviously the people trade and trim and move around during those cycles. But yeah, crypto makes up a big portion of our clients' holdings, and there's a lot of enthusiasm, especially a lot of enthusiasm. Year to date, it's been such a fun ride for so many of these guys now.
Yeah, no kidding. Getting back into a bull market after sort of the FTX debacle is very interesting. And it's great to have, regulated brokerages offering crypto because now you feel safe that you're not going to get FTX, so to speak. So that's definitely a nice thing that, eToro provides. Kind of wrapping up here, I like to just kind of wrap up more on a personal side. What do you like to do for fun outside of work?
Oh man, so I'm based in Michigan, and I wish I could say I'm a skier. That would make winters so much more enjoyable. I'm not. I don't ski. I'm not even a winter person. So, but I absolutely live for the summers and the warmer months. I'm a big water guy. I like to kayak a lot, and just do kind of anything with boat or sail, kayak. Just kind of hang out around nature, be in the, we get the long sunsets. So that's sort of my jam. Outside of that, just traveling and kind of the usual stuff that I think people usually enjoy.
That's awesome. Yeah, I lived in Chicago for quite a few years, and the summers in the Midwest are so fun. The winters are brutal for sure, but yeah,
So brutal.
the Great Lakes and everything that provides is so nice. Do you
Yeah.
have on the options side? Do you have any favorite options books that you read throughout the years that you would recommend to listeners?
Yeah, it's funny. I just lent this book out to a friend of mine who's trying to learn options, but it was and I don't know. I guess I don't know what the best book is anymore. But for me, it was Options for the Beginner and Beyond by Ed Olmstein and or Olmsted. I'm sorry. And I don't know. That was the book I read and learned. The basic functions of options, and then once I learned the basics through the hard way, and when I went back to learn more about the some of the more advanced strategies, and that book covered it all, and that was kind of my my options bible for a number of years.
Oh, that's fantastic. And then last
Yeah.
question here. If listeners are looking to pursue, if they're they're young in their careers and new to the field, what advice would you give them if they were trying to pursue a career like yours?
Man, I would say, first you got to be passionate. I don't think anyone in this business, whether that's doing podcasts about it or working on more of the research side, but I don't think you can do it if you're not interested in it, truly passionate. From a passionate perspective, it's because it's too easy to burn out. There's too much information, and there's just a lot of work involved. But if you like the work and you like what you're working in, then it's kind of it doesn't feel like work on a lot of days. So I would say you got to be passionate. And the other thing is, leverage your social platforms. Twitter, Connect. I never would have gotten a lot of the opportunities I didn't get if I didn't reach out to people, or if I didn't connect with them, or post things on Twitter or X or whatever you want to call it, and LinkedIn. That's where people find you and get ideas. And if they like your work and you're a courteous person, then that leads to connections. And those are the types of people that can say, hey, we have an opening over here if you're interested in interviewing. So that would be my suggestion.
Yeah, that's fantastic. It's so interesting. It's such a newer generation thing, but yeah, we've met a lot of on our side. We've met investors, employees, friends on Twitter. Really interesting sort of colleagues and business connections. So Twitter is a very valuable space, no doubt.
Yeah, it's become the place for FinTwit. So
Very interesting. Well, Brett, thank you so much for coming on. Very interesting conversation. I'm happy to have you on, and hopefully you can come back on again.
yeah, I'd love to be back. As thanks so much for having me.
Absolutely. Thanks, Brett. Thanks, everyone. We'll see you next time.